Hello, Jeremy Harper here, giving you an update after the RBA August meeting has just concluded. The RBA has decided to cut the central cash rate by 25 basis points down to 3.6%, which is in line with market expectations. What's really interesting about the reviewing the board meetings was just the unanimous decision. That was the first thing that stood out to me. What I mean by that is when we compare our July meeting, we had a 6-3 vote, 6 voted on the board to hold the rates as they were, and 3 voted to cut. And those 6 votes have now flipped over. So this time, the full board of 9 voted unanimously to cut by that 25 points. And so to me, that highlights that there was some data within this current period that stood out to the board and made them cut. I think a lot of them were sitting on the fence. If you look at some of the commentary around that last July meeting around real wait and see approach, that has now disappeared. And so what we saw was a few things stuck out to me was the highlighting of, number one, the inflation data. So they're comfortable around that headline inflation, where that's heading. It's within their band of that 2 to 3%. They're now anticipating that's really more in that midpoint. So they're quite comfortable there. But the thing that really stuck out was the labour market, and particularly the unemployment rising to 4.3% during the June period. Although that is still relatively light in historical context, the RBA is concerned. So that's why they've cut. They also feel like they've got a bit more of a handle around what's happening in the global economy in terms of the tariffs. They've had that wait and see approach around what's that going to do to the Australian economy. I feel like they understand the risk there and they're comfortable where things are. And they've made note that if there's further deterioration on the global sense, they do have the ability to cut into the future. So they've got clarity around the overseas tariffs and the global economy. They've got a bit more clarity around the inflation print, where that sits. And now they're just looking towards unemployment and what that's going to do to the Australian household and the Australian consumer. That has still been noted that's quite particularly weak. Even though we've already had now 2 cuts since the start of the year, this will take us to 75 points. And we're now seeing the repayment as a percentage starting to ease on that peak. So what we mean by that is the peak in 2024 on the mortgage repayment, that's come off 0.3. So we're starting to see a little bit more breathing room for the Australian household, the mortgage holder, which is great. And now what the RBA is looking towards focusing on is how does that stronger consumer react in the short term in terms of demand and consumption. So that's something to look out for. So if you have any questions or you want to chat around your mortgage, please reach out. Thank you.